I didn't lose money because I didn't understand the charts. I lost money because my brain lied to me about what I was seeing on the charts. I looked at the setup and told myself, this is about to break out. This is about to move. If I don't get in now, I'll miss it. But that wasn't discipline. That was my brain creating false certainty before the market had confirmed anything. And once you believe that story, you stop trading the charts and start trading the emotions behind it. So on this video, I'll show you how this happens on the charts and where I've made these mistakes myself and 5 ways to stop your brain from sabotaging your trade. Let's go. Now let me show you what that actually looks like on the chart, because this happens faster than most traders realize. Remember, your brain doesn't want probabilities, it wants guarantees. So when we look at this leverage ETF, SOXL, we look back with 2020 hindsight and say, oh, perfect, I would have gotten in there, and I would have gotten in there, and I would have got out here, and I would have been perfect. The fact of the matter is that bottoms look obvious, reversals look obvious, and breakouts look obvious, but they're not. Because we always wind up all the way over here on the hard right edge. And the little voices start right there. The little voices take over. Oh, this is obvious. This is clearly a setup. After all, that's a bullish engulfing pattern, but the chart has not confirmed the trade yet. Momentum on the weekly chart still heading down. TSI just about to stop. Yes, we have a clue, but we do not have the total answer. This is the certainty trap. Your brain hates not knowing, so it creates false certainty, saying this is the one. The small voices start telling stories like, you got to get in now because you missed the last trade. And we want to remember that the voices start helping your eyes see what's not really there. Let's see what happens with our trade of SOXL going forward. So here's what I do. I tell myself, aha, I'm going to buy the high of the low day, which is right there. Had a bullish reversal signal. Never mind this over here. I'm not seeing this crap over here. And I just put in my order to buy, in this case, at a nickel above the high of the low day. I put in my stop loss, which is down here at 45.66 if it gets to 56, which is 15% away, but it's safe. Where's it going to go from here? So I'm filled the next day as it bounces up here. And why should I worry about hitting the moving averages and reversing down hard? After all, I know I'm right because that's what the little voice says. Over the next few days, here's what happens. I start to pull back a little bit, but still no worry, I'm way above my stop loss. Am I worried? No, but the little voice starts creeping in saying, oh no, here we go again. It's just like the last time. Have you ever heard those little voices? I know they used to bug me to death. And you know what? After 30 years of trading, they still show up occasionally. And check it out. Another week goes by and look what happens. Price action rolls right up into the resistance of the moving averages, rolls over, and I'm starting to go, oh no, here it goes again. But I have to give it a chance. I have to give it a chance. After all, my stop loss hasn't even been touched yet. What would you be thinking right now on this trade? Leave a comment and let me know. I know what I was thinking. And look at that. By the middle of the next week, pow, price action broke out. However, it didn't get very far above these highs. And the sellers came back in. But hey, I broke out. My little voice says, you got it right this time. And then the next day happens. 2 days later, after the breakout, price action continued to fall to the downside. And check out what's happened. My momentum indicator is reversed back down. The longer term momentum indicator is still pointing down, and my MACD is still pointing down, and I'm sitting there sweating bullets. Ever sweated those bullets? Just above the stop loss of 15%. But still, the voice says, don't worry, you're going to make it this time. It's going to turn back around. It's showing positive. And then the other part of the voice is saying, you dummy, you're doing it again and you're going to get stopped out again. The next day, and this was after, let me put a little context on this. This is after sitting on this trade over the weekend. And with the center going, oh, okay, yeah, it's going to come back, and you're having an argument with yourself. You ever had one of those kind of weekends? And this is what happens. Prices actually opened up a little bit and then slashed down through the stop loss of 15%. And this is where the majority of traders would say, I'm not going to watch SOXL anymore. And that leads to regret number 2. But before we get there, let me share with you about the two kind of traders that are sitting down here waiting for SOX to turn around. Folks, at almost every bottom, there are two types of traders that are waiting. There's a level 1 trader and there's a level 2 trader. The level 1 trader is the fast thinking trader. It's the beginning trader who's saying, I've seen this before. I know what I'm going to do, blah, 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 blah. But they listen to the little voice a lot saying, this is the time, this is a trade, you got to get in, because if you don't get in, you're going to miss it. We've all been there. We've heard that. And then there's a level 2 trader, calm, collected, trading a system that forces them to wait for momentum shifts, candlestick patterns, that then tells them, yes, it is now time to get into the trade. So what oftentimes happens, and I'll expand this chart just a little bit, what oftentimes happens, the level 1 trader completely blanks out what happens next and ignores it because they never see it. They keep it on their watch list, but they never look at it for weeks from now. And then it sets them up for the second regret we're going to talk about right now. 3 days later, we get a secondary reversal signal, and the longer-term momentum starts to shift back up, telling us that, now's the time. The level 2 trader has been waiting and is ready to jump on board. The level 1 trader totally missed all of that. Has totally missed all of that and literally blanked it out because they don't see it. The level 2 trader is now ready to act. If he or she misses the close above the 8-day moving average there, they're all lined up for the rebound off the 8-day moving average right there. And so they've parked an order, buy, and so they're into this trade at about, let's say 52.50. But it's what happens over the next few days that will, one, blow your mind, and also make the level 1 trader regret even more that he wasn't patient to begin with, and the voices start all over again. The level 2 trader planned his trade, entered here, put his stop loss in place, didn't come close to the 15%, and SOXL took off on a rocket ride earlier this year that was absolutely phenomenal. How far did it run? Now, this isn't a promise that we're saying, yeah, you're going to make this much profit. Okay, it's not. This is for educational purposes only, and not a recommendation to buy, but a recommendation to learn about how to become a level 2 trader. So from there to there, you're going to look at that and you're going to go, if I got in right at the bottom, we've just ran up 423% in 57 days. Pretty amazing. So how do you think the level trader is feeling right now, considering he was blind to all of this? He may have woken up about there, but he was blind to all of that. And when he finally got back around to watching SOXL, he went, oh my goodness gracious, look what I missed out on. What kind of stories does he start telling himself there now to make up for the mistake he's already made, but also to add to the stories he will probably tell himself when it's time to enter a new trade? Can you think about that, both on a positive, oh, don't miss another one, I'll have to do this, this, and this, and this. And then the flip side of that, yeah, but what happens if I make a mistake? What happens if I miss the next one? I just missed a 400% gain. It all piles into the level 1 traders because they have not learned how to click off the switch and tell themselves a better story. And so as we watch what transpires over the next couple of days, there's no judgment. We've all been a level one trader, and that level one trader still occasionally crops up his head to whisper in our ear. I mean, I missed this trade, guys. This is the trade that I did. And I just kicked myself in the butt because I was distracted and missed what the charts were telling me. And this is where the next part really even increases the pain. And the next part is, what do you do now? SOXL is selling off as of last Friday. What voices are whispering in your ear? And again, FOMO kicks in, FOMO of missing the next turnaround, but also FOMO of repeating the mistakes you've made. Because the level one trader will look at this and say, oh, I got to buy this as quickly as possible because I know what happened over here. But do they have a setup? No, they do not. So the story the level two trader tells themselves is way different. It's, I'm getting a pullback. Profit taking is underway. Now let's wait for my system to tell me when to get in. And if we hear the little voice whispering in our ear, oh, you're going to miss it again. Oh, you better get in now. We basically just grab him by the neck and just slap him around a little bit and say, shut up. You're trying to make me not trade my rules, and I'm going to trade my mechanical system. The script remains the same, folks. And the repeated things that our little voice tells us, what if you get stopped out again? What if this is another fake move? What if you're wrong twice or three times or four times? That is when the trader freezes and you are not calmly following the rules, and your brain has lied to you, making uncertainty seem certain and open the door to bad decisions. So you want some help with that? Let's jump into the next section. And now I'm going to give you 5 ways to stop your brain from sabotaging your trades. The third one may be the most important, a real banger, because it removes one of the biggest sources of emotional noise before the trade even starts. So how do we stop the cycle? Not with more willpower, but with structure. Like we said, level one traders look for certainty on the chart when there isn't any, and level two traders find certainty in the process. So how do we stop the cycle? We stop arguing with that small voice inside after it shows up, and we start training it before the pressure hits. The voice isn't malicious. It's just doing its ancient job of trying to protect you from uncertainty. But in the markets, that protection becomes sabotage. And let's look at those 5 fixes. Listen for the one that hits you the hardest. And if you want the full checklist, comment 5 fixes below, and I'll send you a PDF with these fixes. So have you ever jumped in a trade because it looked close enough, even though the setup wasn't fully confirmed? The small voice inside says, this is it. Don't wait too long. If you wait for confirmation, you'll miss it. The fix is basically trade a mechanical system with clear rules. Before the market even opens, I already know my setups, my confirmations, my entries, my stop, my targets. And you don't have to build one of these mechanical systems by scratch. That's the exact system that I use. I just to talk about in my book, Trade Your Way to Freedom. This fixes early entries, early exits, and that false certainty your brain loves to create. The link's in the description. The rules don't help much if you only look at them once the voice is already loud. That's why the second fix is about preparation. Have you ever opened your charts in the morning or in the evening and instantly felt like, oh gosh, I'm already behind? The small voice says, you need to make a decision right now. This could move without you. Well, the fix is build a simple daily, weekly, and monthly routine that will only give you so much exposure to the market. A daily routine keeps you aware, a weekly routine keeps you prepared, and the monthly routine can keep you honest. This fixes that hard right edge panic that we all get into when we're looking at that daily chart going, what's it going to do next? But even with a routine, you can still overload your brain if you're watching too much noise. And this one is really important. Number 3 is the real banger. Have you ever watched so many charts that every single candle made you feel like you are missing something big? It reminds me of a psychologist who was trading that I helped out. And she was watching like 50 different stocks. And she comes to me, Dennis, and she goes, I can't make any trades because I'm watching so much that, it's too fast. It's moving too fast. And I told her, I said, Linda, what you need to do, actually I said, doctor, but I said, Linda, what you need to do is you need to cut your watch list down to 10 entities. Oh, no, I can't do that, is what she said. I can't do that. I go, well, why not? She goes, because I might miss something. And I kind of scratched my head and went, well, wait a second. You're missing everything now. So what's the story? So I kind of was looking at, doctor, go heal yourself, or listen to your own psychological advice. But FOMO ruined her life. So in this one, the smallest voice says, something is running somewhere. You need more opportunities. If you don't watch everything, you'll miss the one big thing. So ruthlessly follow fewer stocks and leverage ETF. History proves smaller list, smaller attention spans can lead to bigger results. A serious trader doesn't need unlimited opportunities. A serious trader needs a manageable process. But even with a fewer charts, that still small voice will still show up from time to time. So fix number 4 is how we catch it and we retrain it. Have you ever looked at a losing trade and only ask yourself, how did I lose? Instead of the more important question is, where did I break my rules? This small voice is, hey, buddy, you missed again. So in this fix, it's simple. Keep a rule-based journal that also captures what you're thinking, what you're seeing, so you can go back and review it later. A proven fact that traders who journal tend to be better traders. Your journal should not just track your profits and losses, it should track your obedience to the process. So the journaling trains the voice after the trade. This fix protects you before the voice even starts talking. So have you ever made a clear plan before the market opened and then watched yourself abandon it the second the bell rang? That small voice says, move the stop, take it now. Maybe this time it's different. Well, the fix for this is learn how to automate. In AutoPilot trading, we automate our trades with the first triggers 3 OC orders, and we fire and forget, put them in on Sunday, walk away, and let the system take care of your trade. Automation enforces responsibility because it makes the process much harder to abandon in the heat of the moment, in the heat of the battle. So your decisions are already made. So guess what? The little voice has nothing to say. And that's the shift. Your brain is hardwired to lose money when it tries to turn uncertainty into certainty. This is the certainty trap. It shows up when you enter early, get stopped out, miss the real move, and then carry that pain into the next setup. Level 1 reacts to the chart. Level 2 follows the process. I'm curious, when you look back at your trades from the last month or the last year, where do you usually get caught? Are you the hopeful buyer who gets in too early? Are you the trapped long who got in too late and now you're just praying that it'll come back? Or are you progressing towards being a level 2 trader who waits for confirmation? Drop your answer in the comments. No judgment. This is how we get better. I'll respond to every comment. If you want to see how this rule-based approach works on actual chart setups, watch the next video because I'll show you how I use the system to separate a real setup from an emotional fake out.